In this video, I want to show you how I trade gold. Gold is one of the things that I make a good chunk of my return on these days. It's been in a really good condition in the market. And I'll show you today how I swing trade it. Not looking at any kind of day trading, really active trading, but more on bigger time frames. We're trading daily chart and weekly chart here on the channel. If you're not subscribed, make sure to subscribe to see more of these videos. And with that, right into it. So for gold, you can trade it in multiple ways. What I do is I trade IAU. It's an ETF. It's the iShares ETF for Gold Trust. You can also do if you trade Forex. You can go and trade the XAU USD. That's what it's called over here. They will both look the same. This one has less gap. It's a bit more consistent. It's a CFD. But for me, I prefer the ETF because it's based on my stock account. I can have access to it there. And it's working out pretty good. So IAU is the one I look for. There's many of them. If you go and TradingView and search, you can find many of them. But this is the one I look for. So the method I'll show you here will work for any index or any gold you can look at. It's gonna be the same thing, same principles apply. Gold, a lot of the time, is gonna be trending. It's an asset that tends to go up, especially when the economy doesn't go too well or when things are uncertain in the market. Gold will tend to go up. It tends to go sideways when things are much better. When you have big stock market movements, gold will tend to be more sideways, maybe go down a little bit, but it doesn't really have any big crashes. Because here, this is going to be going back in the past a lot. We have pullbacks. I'm looking at the weekly chart, by the way, a very high time frame. We have pullbacks, but these pullbacks are never very extreme. Okay, we went from here 37 all the way to 21. This is a big pullback. Right? That's when we had the 2011 or so, when the stock market performed really well after the big crash. But for the most part, gold will be trending quite well over the long term. That's really what we look at here for swing trading gold. We look at a bigger picture trend. Usually it's going to be an uptrend, and very few downtrends in this. And what I do to measure the uptrend or downtrend is I use a Hall moving average. This is a HMA, Hall moving average. It's on my chart here, a 50 period that I look at, and this gives me a good idea of the trend. Are we trending up or down? Because it's going from green all the way to red, to green, to red, to green, to red. If we are going back and forth, then chances are we are sort of sideways more than trending. But if we see the Hall go up for the long term, then we're going to be in an uptrend. And you'll see how these set up on my chart. They show up these triangles. These are my setup I trade based on my custom indicators. They are basically engulfing candles within the trend, within the Hall being green. A couple more filter here. And if you want to learn more in depth about this method, I'll link below in the corner here or down below. It's a free course I've done, going in depth with this indicator and how I use it and the rules behind it. And while I look at specific setup and the other ones, and you kind of see more in detail. So check it out. It's a free course. There's nothing to pay here. Just get the course, watch the video, and you'll learn about how these things work in the market. For now in this video here, I'll keep it a bit high level, but the training will go more in depth onto these things. So what we have at the bottom here is another indicator, which is also a Hall based indicator. It's going to be a 200 period all moving average. What this does is kind of smooths out everything. So when you see we have red here and we have red here, we have green here and we have green, but then we go to red, then we go to green. We want to make sure we align the long-term Hall with the short-term Hall. So if this is red and this is green, could be a good place to buy soon, but not a good place to enter right away, right? When this turns back to green, right over here, we are green. You can see if I zoom on the chart a lot, my candlestick actually highlights green too, based on the indicator I quoted. This gives me an idea of, okay, we're gonna go on an uptrend. So if it's gonna be in a high volatility market, where price moves a lot and really fast, and for this we can look at the VIX, just on my list somewhere over here. The VIX gives us an idea of the volatility in the market. Only in the stock market, you could apply this to currencies too if you want, and Forex, but for the most part, it's gonna be in the stock market. You can see when you have a really high VIX, we have a lot of volatility. When it's low, like over here, we have very low volatility in the market overall. Kind of good indication of volatility in general. Not completely like pair by pair or index by index, but still a good idea to look at the bigger picture. And this gives you a good clue of how the market behaves. So going back here to gold, again, weekly chart, we have very high level here. The long-term Hall is green. The short-term Hall turns green from red. That is a first entry. That is the first setup we can go into. Not the best setup because you probably enter at a high point, at a very high level in the trend, kind of like a breakout trade, but it's still a good entry if you have a high volatility. Price sometimes will not pull back, it will actually go up and not stop, and that's why this entry here is really powerful. Next, you have other entries. These are the ones I teach more in the course. You can check out the course. Again, I don't want to be too annoying about this, but it's really going to go in depth into how to trade this well and how to look at all the rules behind it. So go check out the course. It's free. It's linked below. This is our second setup. So we can look at an engulfing candle in the trend with the Hall and also below the Hall. And if you want to see why that's important, the course kind of goes in that. And if you want to see how that matters, it's important because above the hull is a bad area to enter. Below the hull is a good place to enter. So this is a second setup. As you can see, we can just go and take a buy trade, right? We can go and enter above the high, put a stop loss somewhere below the low. Now this works well in Forex and stocks. I tend to be a bit more careful. So this is going to be an ETF, but also a commodity. So I'm okay with putting my stop loss over here. And then we just let the price run. Now check it out. We have these little dots over here. What are these little dots? These are actually potential exit areas. Not full exit, but they are partial exits. I used to have a really, really hard time in the past where I would go on the trade. I would set like a 2-to-1 reward to risk for my trade, then put a target 2-to-1. And then the price just barely gets there and reverses. Or it kind of goes there, then I get out, and then it goes fully far after that, like much further than I thought it would go. And that's why these dots are really powerful. I coded these because they give me a good idea of how far the price is compared to that whole moving average. If we're here, yeah, we should not get out. It's kind of an average price. But if we're like all the way to here, right? Oh, we're pretty far from the hull. In this case, it kind of counts the distance between the hull and the current price. My idea here with this is that if we're going to be far from the hull, I'll take some profits. I never take full profit in the trade with these dots, but they are a good sign of taking partial profits. So I can get some part out over here, right? So maybe close half the trade. Price goes up a little bit more, not very much, goes back down. Then we have another setup over here. Well, guess what? We can add more to our trade here. We have our original trade that's been here. We can add more here with that setup. Let the trend ride. Again, we could add more over here if we want to. Maybe we don't do it because this setup is very close to that one. We're going to be very barely in profit on this trade. So maybe we don't add anything else here, but we just let this ride. Right? So if you have any dot coming up, we don't have any dots. We come back with the second entry. Again, we can scale in over here, add more size. As you get to build these positions, this can really lead to some really, really big winners. Because you build your size up, you increase your size, you really go up, and you really take more risk, but the risk is very small because you can always move your stop loss to break even, or you can try to move the trade in your favor. I don't tend to move my stop loss too much, but I know these trades won't go back really far, and I can really kind of scale up my size that way. Then we have this one over here. This is a different setup that I trade. This is the bonk run reversal. I've started this into many videos in the past. You can check it out. I'll leave a video actually link over here with this strategy taught. But this is a reversal sign. So I'm going to maybe take some profits here at the close, right? It could have gone down from here. I don't know. We cannot tell in advance. In this case, it went back up, but I'll take some partial profits here, right? Just as a sign of precaution. Price goes up. Oh, we have a dot. Okay. Now we can take some profits here. Now, sometimes I let it have 2 or 3 dots before I take profits, just because I know price will maybe go higher a little bit and come back. Sometimes it doesn't, but I take the risk to wait for 2 or 3 dots sometimes. So 1, 2, and 3. Let's say we take 2 dots over here, take some profit there, and we see price went up a little bit more, but then came back down, and now is where we are right now. Okay, this is a weekly chart view, very high level time frame. You could trade this if you want to. It's going to be taking you years. What I do is I combine this with the daily chart. So daily chart is right over here. Same idea happens, right? The same thing. You have the same setup coming up, the same kind of dots. You can see sometimes the hull turns red, or you probably get out more, or you probably want to get out of the trade or close some parts of it. Then it turns back to green. We can add again. You can see our green candlestick over here. This is recent, right, in March. Then you have another setup over here where we take some trades on this. We have a dot. We actually have 1, 2, 3, 4 dots. Well, 3 dots. Yeah, 4 dots actually. So we'll take out on the third dot, some profits. That did come back. Then you have a setup here where you can see it's a bit messy on the daily chart, but it's working really well anyway. And we have these trades that sometimes last a bit less time, like just a week or so. And sometimes you will get out closely here when the hull turns red, right? With the small loss at the top. But that's totally fine because you capture the whole move on the way. You add to it on the weekly chart, add to it on the daily charts, and that really gives you a big edge. So if you want to see how it's done in practice, I'll leave link below. As I said, the free course. It's a free training. I don't want to be annoying about it, but you should get it because it's free and I go through everything we covered here in more depth. It's going to take maybe like 30 minutes or so. Hope you get some value out of this. Let me know in the comment section below your thoughts on this strategy. If you want me to go more in depth on how I do this, if you want me to do a 6-month review, I might go through my performance stats of the past 6 months. I can definitely share out on YouTube if you want. Let me know below by commenting 6-month review. I'll know you're interested, and I'll catch you back here in the next video pretty soon. Ciao.